Yesterday, some pretty controversial news came out for BBAI. Yesterday, the annual shareholder meeting took place, and shareholders approved an additional increase of authorized shares from 500 million to a billion shares. And there's lots of controversy because shareholders right now are very divided on the news, whether to take that in a more bullish perspective or in a pessimistic bearish perspective, because some shareholders believe this is going to give management the flexibility that they need, while on the other hand, everybody just hates the fact that they feel dilution is coming. And I want to break that down here with you guys, and that's going to be the main topic of discussion for BBAI. And speaking of BBAI, shout out to Gemini and the Prophecy AI app, giving it a 1-year bullish projection, price target of $4.42, and we currently are trading at $3.99, down just under a percent, to be exact, negative 0.75% on the day. Now, at the annual shareholder meeting, shareholders, as I said, they approved the increase from 500 million to 1 billion authorized shares. Now, the important thing is you need to make a distinction real quick. Is authorized shares and issued shares are two completely different things. Just because they were approved for a billion authorized shares does not mean that they're going to be issuing an additional 500 million shares today. It's not like the announcement and the vote happened yesterday, so those authorized shares are getting issued next day like that. That's not the case. So I just want to make that very clear. But instead, what it's doing is it's giving management additional flexibility for future capital raises, acquisitions, employee compensation plans, and other strategic initiatives that the company sees as best for its growth. And the main questions that investors are asking on not both sides, but the two questions I will say is, will this newfound flexibility that they're having create actual value, or will it dilute the current shareholders of BBAI and hurt the stock even more? And when we look at the comment sections, first off, shout out to all of you tuning in to yesterday's video, my best performing video within a 24-hour period. So love seeing the channel grow, and I love seeing you guys tune in. But speaking of the comment sections, even though not all shareholders of BBAI tuned in, but it does give you a little bit of a good insight talking about what it is shareholders are thinking of the company right now. So for example, you got some people from the bearish side of things, you got people saying super dilution and it's going to cause problems, then, and that it's going to shoot the stock all the way back down to under $1. Then you got other people saying how dilution kills plays. And then from a more bullish standpoint, you're seeing here, this is a little more neutral. This comment right here saying how they don't mind flexibility. Shout out to you, Music Man, but they don't mind flexibility of the authorized shares. But again, for the right reasons. And for his reasons, he's stating how they need to get some revenue and profit on the books before they add any new businesses. And shout out to you, Rich Buddy, saying how they're just looking to raise AI expansions via shareholder investment, opposed to taking debt, as he said Google did. And he took this as a more positive, that the result of the ballot yesterday was more positive, how they have the authorization to increase authorized shares to 1 billion. And the immediate response to another one saying how they, for example, shout out to you, Spad, find other ways instead of screwing over the shareholders, even though you didn't say screwing over. I love it, Spad. Thank you for tuning in though, man. And with those comments and with that division among shareholders of BBAI, I don't necessarily blame either side, whether if you're looking at this as more bullish or bearish for the company. And the reason why is because the main concern that you heard over and over again from the bearish side of the argument is relating to ownership percent decrease, which happens when dilution does occur. Because one of the biggest concerns is the fact that if you are diluted, if there are more shares outstanding and you don't buy those additional shares, obviously you're going to have a smaller percent ownership of the company, and your overall percent ownership decreases. Now, ownership percentage. Now, here's the important part, the important distinction that I think investors need to make is the fact that, and again, you can view this any way that you want, but dilution alone isn't necessarily the problem. What I'm trying to say is that when the problems really occur is when management dilutes their shareholders and fails to create enough value with the money that they raise. That's the real concern, not just dilution alone. Because, for example, an example I can give you is that if BBAI uses this newfound flexibility to do things like win more government contracts, if they grow revenue, if they expand operations and move closer to profitability, investors at that point may not care that there are more shares outstanding. But you got to look at it on the other side as well, because it could go either way. If the share count grows and the business doesn't improve enough to justify it, that's where dilution starts to become a real problem. And even though dilution is already a concern right now, but that's when retail is really going to get hurt, for example, retail and institutions. So the question isn't just simply, will BBAI dilute? The real question you need to be asking, even though that those 500 million additional authorized shares aren't issued right now, is can management grow the business faster than any potential dilution that will occur? Because if they can, shareholders can still win in the long run. But on the other side, if they can't, that's when dilution becomes a major problem. And another reason investors dislike dilution is because it can reduce earnings per share. It can reduce EPS, the EPS, which is the earnings per share. And giving an example, let's say a company earns $100 million in profit and has 100 million shares outstanding. That equals $1 in EPS. Now, think of it differently and say, imagine that the company doubles the share count now and it's at 200 million shares. That business still earned the same $100 million, but nothing changed operationally. But now that profit is divided across more shares. So EPS falls to 50 cents per share. The business didn't get worse at all, but each share now receives a smaller portion of the company's earnings. That's one of the reasons why Wall Street tend to react negatively to dilution announcements. And this is probably the biggest fear among shareholders. That would be that BBAI. That would be if BBAI stock has potentially a little bit more issues with future offerings, and that can potentially pressure the stock in a negative way. So let's say BBAI stock is trading at $5 per share. Management can then announce a future offering and plan to sell millions of new shares to raise capital. Now, what investors will start to think is, hey guys, it's David with InvestQ, and a lot of the research and stock discussions actually happen in my free InvestQ community before the videos even come out. I post weekly CTM updates, quantum stock coverage, daily watch lists, and fast-breaking news reactions throughout the week. And if you want to stay ahead of what I'm watching in the market, feel free to join the free InvestQ community. First link in the description below. More shares are coming into the market. My ownership percentage could decrease, EPS could decline, or selling pressure could increase. And as a result, many investors sell before the offer is completed. That's why stocks often fall when offerings are announced. It's basically just supply and demand. Now, flipping over from the bearish side of things to the bullish side of things, what some investors that view this in a more positive way is, for example, like what Rich Buddy said, or in a more neutral type of way, like with what Music Man said. Some investors' argument that management is simply trying to position the company for future growth. Not everyone in the comments viewed this as negative. And some investors argued that management is simply trying to position the company for future growth. And the argument is pretty simple. Growth requires capital, especially in artificial intelligence, when it comes to building products and also to hire talent, and when it comes to winning contracts. So all the things that I'm mentioning right here require money. And supporters of the vote believe that management wants flexibility to pursue those operations without being restricted by the previous share authorization limit. And that is showing that shareholders do believe that management of BBAI will not misuse this additional 5 million authorized shares that were approved. So the question, and another question that I want you guys to consider that nobody is asking is, personally, I don't think the biggest question is whether dilution is good or bad, but the real question is, what does management do next? Because dilution, as I said itself, isn't necessarily good or bad. It's not automatically good or bad. What matters is how the capital gets deployed. Because bad dilution, it looks something like this. They raise money, they burn through a lot of their cash, there's no meaningful revenue growth, no profitability improvements, and no shareholder value created. In that scenario, shareholders absolutely lose, and that's what I'm talking about when dilution is a concern and management misuses the additional capital and the additional funding. Now, good dilution, where management executes appropriately, is they raise capital, they invest in growth, they win larger contracts, they expand revenue, and they improve cash flow and increase long-term business value. So in that scenario, shareholders can still come out ahead despite the dilution concerns that are happening. And there have been successful companies out there, many successful companies, in fact, that diluted shareholders early in their growth phase, but generated enough business growth to more than offset the dilution over time. And what I'm going to be watching, guys, is whether management can justify it. Over the next few quarters, I'm going to be watching, not just the next quarter, but the next few quarters, I'll be watching to see if revenue grows, if they win more government contracts, if there's any progress towards profitability, if operating losses improve, if there's operating loss improvements, if I'm going to be checking to see if they're burning through lots of cash or not, and any future share offerings. Because ultimately, those metrics are what I think will determine whether any dilution is determined as good dilution or bad dilution. So let me know what you guys think in the comment section below. Do you side with more of the bullish side of the argument or the bearish side of the argument? Please let me know, as I do appreciate y'all's input. And also, feel free to comment what it is you want me to see in future upcoming videos. And also, for those of you that are still here, please feel free to tune into tonight's live stream or tomorrow's live stream regarding the SpaceX IPO. Again, it's the first time I'm going to be having a live stream during market open, and I'm very excited. And if you do feel I gave any value to your investing journey, please feel free to hit the like and subscribe button, as I do appreciate the support. But with that being said, guys, David Figueroa with InvestQ out. Stay safe. Keep making good decisions to your long-term portfolios, and I'll see you all in the next video.